All right, and welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So markets here today, pretty much a non-event. We did kind of float up into sort of the end of the week. So last week we had that little bit of a dip there. And, it was bought pretty quickly. Again, holiday period. We talked about light volume. You don't want to fight the trend here when there's not a lot of participation, when you have declining volume, especially going into the end of the year. Generally, you just want to give the market the neutral to upside bias. We did see a little bit of that Santa rally effect come into play, though we did see some volatility on Friday as markets did dip down pretty sharply. My guess is that a lot of it is just end of year repositioning. A lot of it came from Mag 7, a lot of the selling pressure that is. So possibly some profit taking off this tremendous rally here. And again, a lot of the time you get the tax selling deferred to the beginning of the year. Sometimes you'll have some at the end of the year. I mean, there's certain things that might make sense to lock in the gains this year and pay the taxes, going into next, tax season. But in any case, again, we're not going to make too much out of that. The markets have kind of grinded up here. And we've talked about, I think, a possible January effect is in play. That doesn't mean the market can't pull back a little bit, and maybe we do get a little bit of tax loss selling in the first week. I would expect the first day there's going to be probably a pretty good bid, though, at least on the open. Pension funds, 401ks will be reinvesting capital. So look for that. But, again, market's a little extended here, as we've talked about. And I wouldn't even rule out, some backing and filling, let that 20 MA catch up to price. And then I think you could get possibly one more kind of January effect move. If that doesn't happen and we continue melting up, we talked about this in the show yesterday. If you haven't checked that out, check it out. It's on the channel here. And but I talked about this a little bit yesterday. If this continues to melt up and does not do any sort of consolidation or backing and filling or pulling back, I think this is a little bit, we could see the market come into an increased period of risk. Something very similar to kind of Volmaggedon in 2018. And the only reason I bring this up, again, I'm not calling for anything like that to necessarily happen, but that there is a heightened risk when you just continue to go vertical like this, which we've done. Now, it hasn't been as crazy as this just yet. Well, it could happen, though. We could blow off. That you can get these big snapbacks, right? So, same time period too. It's kind of the end of the year and going into January. But again, you got to figure that the more you go up or the size of the move that you make, the retrace is going to be proportionate, right? If you have a 5% move and you retrace 50% of that move, well, that's only 2.5%. But, when you have a 20% move, and you retrace 50%, that's going to be a 10% retrace. So some things to consider, but markets here, won't make too much out of the action this week. It is a shortened week next week as well. So again, we should see the volume. We should see the participation return. But again, we'll see what we get going into the month of January. I think we could do a little bit of backing and filling though. And, again, we're not that far off that all-time high. There's the spiders here. You can see this is the SPX. Again, we pulled back a little bit yesterday coming off the lows though. But again, still only 50 points or so, not even away from that all-time high. And I would think that it's going to be kind of a magnet. The closer you get to a big level like this, the market just has to test it. It wants to go up there and test it. So we'll see if that happens in early January. And then, at some point we'll look for some, possibly a bigger correction. But right now, again, we're going to give the market the upside bias until they tell us to do otherwise. Triple Qs here down. Again, about 30%. I said a lot of Mag 7. Saw some selling. We saw Amazon, Nvidia, Microsoft, Apple, Google all take a pretty good hit, although they did come pretty sharply off the lows. But again, we saw a little bit of selling there. Again, could just be some locking in gains. That's really my guess. I mean, we didn't see yield spike. We didn't see the dollar spike. Volatility did uptick a little bit, but it wasn't like a sell-off that was related to macro from what I could see. It looked just more like a mechanical move, some housekeeping, that type of thing. But triple Qs here continue to sit right off of the all-time high. And again, we'll say maybe we have that 20 moving average catch up to price, and then we could possibly get one more pop there in the Qs. One thing to watch too is when the market has topped, the last couple of significant tops, meaning like July and really going back to if we go back to 2020 or 2020, excuse me, 2021, the Qs topped before the S&P, and the same thing happened in July. The Qs topped before the S&P. So watch that. Could be a little bit of a signal if the Qs maybe stall out and the SPX makes a new all-time high. Could be telling us something. Again, just something to keep an eye on. Not anything to be we're taking trades based off of just yet, but one thing to look for. It has been a leading indicator in the past. Anyways, IWM here. We talked about the 205 handle last week. Guess where we went? So right up there, and that's where we pulled back from. So 204.80 to be exact, but that pivot got tagged, and we've had a pullback the last couple of days. We closed right on it Wednesday, pulled back yesterday, and pulled back again today. I still think this wants to go up and test 210. And again, if we zoom out to the weekly, you're going to see right here, this is where we put in a base in 2021, and we couldn't break through that. The bears couldn't break it through. The bulls tried to break it out, and ended up being a fake breakout. And then the bears finally broke through it, and we retested, and then we went down, and we've been below that ever since. So I would think that the market's going to want to test that. Again, it doesn't mean it has to go straight there. We could do some backing and filling. This 20 moving average, you're still extended. I would like to see that catch up to price before it attempts anything like that. But that's where I think it ultimately wants to go. But right now, it did back off the 205 handle, and now just kind of ping-ponging between that and 198, 200 area. The diamond here, again, same thing as the spiders. We closed above that little reversal bar from last Wednesday, still showing strength. I'm just going to give this the upside bias to 380. So we'll just say that for now. I don't have any other levels to give you for the Dow. It is at an all-time high, and it's not really that extended here from the 20 moving average like some of the other indexes are, but just be aware it is parabolic. So this is on borrowed time. We're going to get a pretty sharp correction at some point. That does not mean it'll happen today. It doesn't mean it'll happen tomorrow, but at some point here in the future, this is an unsustainable type of trend here. Semiconductors here still managing to hold up again, despite the little sell today. They did pop right back up, and the SMH is fine. I don't see any problems there. I still think the SOX is going to 4,300. That is not a short level. That is just a measured move calculation. So that's just a price objective. But semiconductors remain strong, and when they're strong, I generally want to give the market the benefit of the doubt. IGV pulling back off the 410 handle, but nothing terrible here. Again, on the weekly, there's really no problems. But first, we had one red week here. So second red week in, 3, 6, 9 weeks for cloud software. Again, going into these weekly pivots, we'll see if it stalls out there. But again, this has been a very strong sector, and in a strong market. Dow Transport's again backing off a little bit this week, but again, pattern-wise, there's really nothing wrong. It's just sloppy consolidation above the moving averages. If I throw my trend lines back on here, you're going to see I talked about this pivot. We got above that. I talked about 16,250, 16,3. I'd upgrade that to probably about 16,4 now if we do inch higher, because we've done some consolidation here, and I don't really see any problems here with the DJT. Just looks like a sloppy consolidation pattern, and I think this will be also will be a January effect play into the first couple of weeks of the year. All right, let's get over here to interest rates here. Another thing too that we talked about extensively yesterday. If you guys got time, go check it out. It's only about an hour long. One of the things I want to show you too is we talked about this a lot in the 70s, and this is something that I've been on here for a while. I don't think rates are going that much lower, and if they do, it's not going to be for that much longer. But again, looking back at 74 to 82, our path to CPI has pretty much followed the same. So maybe we could grind down a little bit lower here into this year or next year, but it seems that there's a higher floor here. And if we take a look at rates right now, you're going to see the 2-year backing off of that 4.25 area. Again, I could see maybe 4.15, maybe 4.1. So right in this zone here, this is kind of where I'm expecting the 2-year to go. Same thing with the 5. So right around 3.7, 3.68. The 10-year, 3.7. You guys know that level already. And then the 30-year, 3.8. That's really all the downside I see right now for yields. And I think that yields are going to surprise the market a little bit into the first quarter. Had a lot of volatility. We're above 5% in just the 30-year here. We're above 5% about 8 weeks ago, and we're all the way down to 4 right now. That's a massive move. But in any case, yields are continuing to pull back here, but that's really the max downside I have penciled in for them at the moment. And I'm in the camp that there is secular inflationary pressures in this market. But in any case, right now we could see a little bit more downside here, but I think that they'll uptick pretty substantially in the first quarter. Anyways, let's get over here to XHB. So again, kind of a nothing burger, did float higher, new all-time high, and just kind of chopping around, grinding higher. As long as rates are going down, this is going to get a tailwind. If rates start to pivot, I think this will come back in a little bit. Home builders are tricky though, because you have a lot of families not looking to sell, because if you had the rate, locked in at 2%, it's very hard for them to move out. So it's kind of a double-edged sword it's almost kind of, it's like home builders get to have their cake and eat it too, because if rates go down, then that's good for home builders. But if rates go up, people don't want to sell. So they're kind of getting the benefit of the both worlds right now. Eventually this trend is a little unsustainable. We will correct, but again, I'm not fighting it, and home builders are very strong. Commercial real estate here via the VNQ. Nice little pattern there. We talked about that up move, kind of consolidation, and then getting a pop outside of that. Again, I still think there's pretty good weekly resistance here. So again, with that 200 and the 100, also going into this little zone here, a little pivot. It probably needs to do some more backing and filling, but it's holding up, and it's had a really nice run off the low, so that needs to be respected as well. XLF still looking for 38 and a quarter, so I do like the XLF up to that level, and you're going to see that's right there with that pivot. So bank's still strong here, at least for now. KRE I'm expecting for 56, KBE 48 and a quarter. And broker dealers, I don't have a target for. They already exceeded my target, so they're continuing higher, although pulling back in here on Friday. Again, unsustainable, just be aware of that. But again, right now, it is holding up very well. All right, on to everybody's favorite. So let's get on to commodities and energy. So we start off with crude as always. Crude was interesting this week. So we had a nice little up move a week ago, and it had a decent pop there on Tuesday. And then it came back in. So we're starting to roll over a little bit. I'm not so sure what crude's going to do here. I'll be honest. I think that I am expecting some type of a low to be due in the next week or two. Does that mean we take out the spike this low one more time? It's certainly possible. Does that mean we make a higher low? That's also very possible. But right now, I'm just letting crude kind of work itself out. I don't have a buy signal on it, and I don't have a sell signal either. But I am looking for some type of a low to be put in here for a move, maybe up to 80, maybe even higher. But right now, crude in a little bit of a range. We talked about this yesterday as well. Producers 64 seems to be the max move to the downside. I wouldn't rule out a spike of that level. That can happen, but I don't think that we sustain below 64 for any sort of period of time unless something major happens. But right now it is pulling back, and I'm looking for a low here. I just don't know right now if they're going to spike this previous low or if it's going to be some type of a higher low, but just being patient with it right now. But crude backing off here and kind of lost that bullish structure that it had a week or so ago. Anyways, the XLE here backing off as well. Again, I'm leaving this alone right now. I want to see how this shakes out. I haven't touched the energy plays in a minute. I just haven't really had a good read on them. If they got down to the upper 70s, I would be here on the XLE. I would be definitely interested, but that's really all I've got for those at the moment. Same thing with XOP. That low might be in on XOP, and we talked about this trend line. I backed off of it just because I don't like that weekly pattern that we put in. But, it's held up, and we'll have to see how that shakes out. But again, I'm leaving that alone. The only one I really like is the OIH, and I love this for the monthly. This is a really good pattern here on the monthly. Just the 20 MA. I was really hoping for a test of 280 to get involved. But it backed off, and it's holding up nicely. The weekly looks fine as well. If it does get down to 280, that is still a buy. I just don't know if it's going to get there. But OIH, oil services, look fine, and I don't see any issues with them currently. So quickly, uranium here, CCJ backing off of the highs. Again, the trend is still up on the weekly. We'll see if this ends up coming back in. I know everybody loved it, or everybody loves it at 47. Nobody loved it, back in the teens or the 20s. But again, right now, trend is up on the weekly, so there's nothing wrong. We are going to close with our first red month since April. So that's 3, 6, 7, 8 months in a row, green, and now finally working on that red. The one thing I'll say is usually when you go parabolic like this and you finally get a red, it's usually there's usually more to it. So we'll see if this does backing and filling, but the trend is up and it's very strong. The one this ETF in the area of uranium that I do like is URNM. This weekly pattern is much cleaner. It's much more controlled. It's not extended or overbought, unlike CCJ. So if I had to pick, an area to be in, plus it's an ETF, so it's no single company risk. This chart pattern is actually much better. Got a nice bullish inside bar there on the weekly above the moving averages. And I think this can get above double top if this does start to take off. But again, big story, uranium is holding up, and I don't see any problems with it. Nat gas sideways this week. No problems, though. Again, I like what it's been doing here. We had that test candle from a week or two ago. We came down, we came right back up, and now it's just kind of consolidating here. So if this can hold up and continue to be firm, I think it can get up to 280, maybe 283. And then I think you can retest 310. So nat gas hanging in there okay. I don't really see any problems, and I like this pattern. I like that it's coiling up here. I'd like to see it to continue to firm up into next week. And I think a lot of these commodities are setting up for a move in January. I talked about crude. We talked about nat gas. I talked about wheat a lot. I own this, and I really like what wheat's doing. This is a really strong pattern here, consolidating above the 200. Take a look at the weekly, bullish inside bar. And you guys know I've been talking about this monthly level. If we can, I'll draw it back in because I erased those lines, but you're going to see essentially, we were below this area here for, 3-4 years, and we retested it, and now we're getting back above. So I do like this level, and I think this could be a major low here for wheat, and that pattern looks very strong. All right, so let's get over here to the dollar. So dollar index here. Got very close to my 150 handle. We did break through that trend line, and now we're getting a bounce. I'm not sure what the dollar wants to do here. I would have liked it if we spiked to 150 and then got a bounce here. Excuse me. But this pattern here, we'll see. I'll say 102 it can get to in the short run. I would like it better as a tradable low right here at double bottom. That's really the best I can give you on the dollar. The dollar's been very tricky lately. It did not hold that trend line. Let me just fix that. So we did not hold that trend line. There we go. Come on. All right. We did not hold that trend line. We got down to the 150 handle. We held the test candle right there. And we'll see what it does here. But I think the better tradable level for the dollar is double bottom. That's where I think you get a bigger bounce. But we'll see what kind of pattern it puts in here. But, it's getting defended for now, and we'll just leave it at that. Gold did have a nice week, although it is pulling back here today. Again, let's not make too much out of it. Again, I think the dollar gets a tradable low. At some point, that may make gold come in. I think yields will probably put pressure on PMs in the first quarter, but I think that will be a buying opportunity. So again, I'm just being patient here with gold. It is acting well, though, and what I do like, we talked about this in the podcast as well, the miners are acting well, right? So you have this big outside move, higher high on gold, and then you take a look at GDX, and you have higher highs on the daily, GDXJ, GOAU, higher highs. Same thing with silver, big outside move, big sell-off, sell candle. And if we look at the SIL or the SILJ, you've got higher highs there. That is the miners leading the metal. That is a very good sign moving forward. Again, my thesis, though, is just generally right now that yields are going to rebound. I think that'll put pressure on PMs in the short run, but I think that's a buying opportunity if that happens. You guys already know I like platinum. I think the lows are in on that. This may need to fill that contract gap here. So, it's had a nice run. Let's look for some pullbacks here. But this can be bought on dips. And you guys know I love palladium. It did pull back here this week. Again, that's normal. You went from 9. Well, we started to break out here around 1,000, and we went to 1,250 in 3 days. So 3-4 days. So it does need to pull back. But I like this on dips as well. And I am accumulating palladium myself. Copper here, little pullback the last 2 days. We'll see. I like this above 4. Or I should say I'm giving this the upside bias to 4 to 405 for now. That's really the best I can give you. I don't really have a great read on it. I do think there's a chance this can still make one more low. But it's holding up for now. And again, we'll leave it there. Bitcoin here, still acting well, although it is coming in a little bit today. But pattern-wise, it's fine. And if we look on the weekly, you're just consolidating inside of this green. So there's no problems. And I'm still going to give it the upside bias to 48 until proven otherwise. Some of these alts have ran pretty nicely. ETH had a nice bid yesterday, but came back in. I talked about Solana. I told everybody it was going to 80 and then possibly 100. Hey, look, it got to 126. Cardano's has a very nice pattern here. So I like what some of these alts are doing. I don't hate what Bitcoin's doing either. I would not bet against this until the ETF news comes out. My kind of thesis is that we'll get a pop on the ETF news, and then afterwards we'll start a correction. You have to imagine that is priced in at this point. But right now, I don't see any problems with crypto, and it's acting well right now. So again, we'll give it the upside bias until which I think we are going to get that news. I believe they're scheduling some type of decision within the first week or two of January. So it shouldn't be that much longer that we have to wait. Anyways, so back to the S&P here really quick. Market's continuing to grind higher. My guess is we'll have to pierce that all-time high before any sort of significant correction. But right now, again, holiday period. Glad that this is getting over with and ready to get back into the heavier volume, more participation in the month of January. But right now, I think we'll get a little bit of a January effect. We might have to do some backing and filling first, and then we'll kind of go from there. But I do think markets, the closer we get to that all-time high, the more of a magnet it is. So I would expect the market does want to test that at least, in the next couple of weeks. So anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. I'll talk to you guys all next week.